So, hello, and a massive hello to everybody. Hope everybody's having a great weekend wherever you are, whatever you may be doing. This is 50 Pips, rocking and rolling, 21st of May 2017. No trade calls, no recommendations. Everybody sponsor their own stuff. We're here for educational purposes only. So, hopefully, voice is going to hold up this week, and let's see what's going on. So, interesting things going into this week. We'll have to see what's happening with the whole. Trump stuff. We'll have to see what's happening with the Comey testimony. I'd keep an eye out to see what's happening here with the whole Seth Rich kind of deal with Kim.com saying he's got basically some evidence. So I think there's going to be a lot of wheeling and dealing and an awful lot of headline risk, so event risk, so that's something we'll have to be very cautious. In terms of the data front, we do have some interesting things. We've got some Eurogroup meetings, inflation hearings out of the UK. We got IFO coming out. There's a BOC rate statement. We've got more crude oil inventories. We've got FOMC meeting. We've got the OPEC meetings on the 25th. Weekly unemployment claims, core durable goods on Friday. So it should be a fairly interesting week. So, let's see what's going on. Let's try to go through some charts and see what's happening here. So again, equities, what's happening on equities, the big deal is all about this. Here if we look at the SPY, this big gap down, right? So a lot of people are saying, we got this gap down here pretty much through these double gaps here, and has this gap got legs, right? These are very aggressive moves. So all things being equal, you would expect this kind of move to the downside to have follow through. It is not uncommon for this kind of move to retrace back up, but you see here we're pretty much holding the whole 61.8, 78% retracement. So as long as that holds, you would expect the market to want to try and test lower, and you would expect these lows here to be attracting to the downside. Now we'll have to see how the week opens, but Trump is still traveling. There could still be stuff going on. We know there's a lot of potential headline risk. There's a lot of data, etc., etc. But if we forget that and we just look at the technicals here, clearly what's important are those highs, right, short term, and these lows right here, broadly speaking, also. So inside, you could see a lot of velocity of move inside range, but that's the area to focus on. But again, we would expect this kind of move here to get some fall through and continue to the downside. If you look at it in terms of, the Dow here, it's same kind of action. These are very aggressive failures after it tried to break to the upside here, right? We would expect these to have follow through. We'd expect, even though we rally back to that level, we'd expect this move to have legs, and we'd expect it to come back and test down these lows. One of the most interesting patterns, if you're looking at the equities, which we've been going on for a while, is basically, Russell IWM. We think that's particularly interesting here. Some people will be calling this a megaphone, broadening top, whatever. We're not classical chartists per se, but basically these kind of patterns tend to resolve to the downside. And here what we're looking at is this breakdown. You've got this confluence with the moving averages here, the 50% of this move, and as long as we can't trade back above this, as long as we can't get closes above those two moving averages, we'd expect this to come right back down and try and tag that 200 DMA. So this is a very nice pattern, and if that goes there, even on any bounce, then we could have much more serious correction. And at that point, we'd go back to saying what we've been talking about for a long time, is that we have some unresolved business to the downside that November, right, action. I mean, how far is it to those lows? From where we're standing here, it's about a 15% correction. That's a decent move. So it's not something you'd expect to happen in a day or two, but that's what we would be looking at. In terms of the DXY, again, everything's pretty much working quite nicely, right? As far as we're concerned, we're still looking for a move back to the 95s, right? Very nice action. We'll be trading this actually since aggressively since this failure here. Very nice little action, especially on the shallow bounces here back into those moving averages, as we said, that 100 being the key level, and then we broke through. And once we broke through the 98, we said, this could be aggressive, especially into the end of the week and into the weekend. So here we'll have to see what happens. The key thing to keep in mind is, like, whether you're a bull or a bear, you want to see a healthy market, right? So nothing only moves in one direction for a sustained period of time. So even though this could continue to go down aggressively, you'd expect to see, a healthy market to see some kind of bounces, so maybe this gets gapped down a little bit, get a little bouncy action, and then continue all the way back down. But right now, especially as long as this break holds, we haven't changed our opinion since this break here. We're expecting for the 95s to come into play, and that's going to be very, very interesting. If you're looking at something like yen, to look some of the currencies here, we'll try and do a few more things since we didn't do an update last week. Yen, again, we talked about the fact that if we failed this break here to the upside, this would be a pretty serious false break. And the way we're looking at this, at least in the weekly sessions here, is the day close back below the 113 is a very nice opportunity to get aggressively short, right, to try and play for a very aggressive move to the downside. And that's actually in play. Now, before I forget, speaking, all the guys, all the 50 Scouts members, heads up, keep an eye on your inbox, because there's going to be an invite to a session, probably the Friday session this week going out. So if you haven't received anything by Friday morning in your inbox, just hit me up on Twitter, send me a comment on the blog, but you should have something. All qualifying members will have an invite. Sorry about that. So here, right now, the way this is trading, especially unless you get a very aggressive move back above that 113, and especially if you start to see sellers coming in back into this 111, 112, we expect this level to cap. You've got this moving average, these two moving averages coming here. It's the 50 and the 100. We'd expect that to cap and potentially continue to see a move back down. Clearly, it'll meet some kind of support here, but there's no reason why we can't come all the way back down and move, and it falls into line with the dollar view, all the way back down and continue this channel down. Most likely the pivotal level here will be that 200 in the middle of the range. We'll have to see, but it's going to be very interesting to see if these breaks get some follow through. Now, what's going on cable? Now, cable, what we discussed was basically that, as a side note, we think that ultimately this is going to trade lower, but for now, what we had highlighted was that any trade or any day closes above, rather, the 128, there was clearly a risk that we're going to move back up into the 130, possibly all the way into the 132. Now here, I think the 130 is a very interesting psychological level. So look at that from a day close perspective. As long as we keep on closing above that 130 on a day close perspective, we would expect those 132s, and maybe that's going to continue to grind up all the way till the election, right? June 8th, that 132 to be in play. If we day closes back below the 130, then we would expect the 128s to print fairly quickly. So right now, we're looking about 200 pips to the upside, 200 pips to the downside around this 130 level, and a very interesting bull bear line for short-term trading opportunities, at least into the election, okay? What else have we got? I mean, in terms of the ZBs, very interesting action. We are, we're looking for this to be for this to base here, and as soon as we move back above those moving averages, we're expecting for a move all the way back into pretty much the 156s. This hasn't changed for us. We've been going, as people who've been watching the videos will know, we've been going pretty much into every weekend, or all these event risk, long bonds, long gold, right? So it continues to play out okay. And here you'll have to respect this overhead resistance here, and this is probably going to be the bull bear line, or the key with this 200 coming up, to see whether we move all the way back into that 160 mark, or if we're actually going to correct back closer to the 122s. But this is going to be very very interesting. Let's see what happens there. In terms of gold, again, we're a bullish gold. We think we're in a upside rotation, quite nice action here. We're looking for this to ultimately try and make its way, back to the 123 extension of this move here that got front run. Clearly, we'll have a lot of wheeling and dealing to do here. The way we're looking at it short term is 1250, 1300, and 1200, right? And this is the bull bear line, right? So daily closes above or below this 1250 will be key. Now on any move down, you want to see how this behaves around that 100 DMA, and on any rip higher, you want to see how it behaves here on this descending trend line. Those are likely going to be the keys. Can it fail from here back down? Sure. Could it fail from here and go all the way back down? Sure. We still think the way it's trading and the way, event risk, etc., we expect any kind of move down to still be corrective, and we think that this was the base for whether it's straight up or a choppy move for an attempt to rotate all the way back up there. What's happening on crude? Very, very choppy. Again, expect to see a lot of wheeling and dealing here into OPEC. The way we're looking at this is basically this hasn't changed for us for a long time. We expect any move back up here basically this is great for shale producers, a lot of supply coming in, and to see some kind of capping action here, even though you might get a short-term pop, and any move back down below the 40s, even before, you'll start to get a lot of talk, OPEC on the way. So it should stay fairly capped unless something aggressive happens in terms of dollar or equities. But here, our feel would be that even if it's going to rally on something into OPEC, it should fizzle and then maybe try to come back down. So it's a tricky one. As much as you'd have edge trying to trade here, here it's, this 50, it's a very tricky level technically, right? So again, as long as these let me just clear this up. As long as these highs don't go, you could still be building a nice move lower, but you could easily argue that, if you look at it on a weekly, it's clear that this was the base and we're shooting back higher. So both cases make sense, and it's very little to draw any conclusions as long as we're trading in mid. So we'll have to wait for all that event risk to come. We always call it the way we see it. If something looks very interesting or clear, we'll say it. If something looks a little bit messy, we'll call it messy. And another chart which we think is particularly interesting, which we talk about, is the financials, XLF here. So, we've been talking about this giving back a lot of these gains, and so far so good. It's been a tricky one, especially on this rip higher. But right now, since we broke there, you saw very aggressive action to the downside, nice little roll. And here you see how it looks very, very toppy here. So especially if it gives way below, start to get daily closes below the 23s into the 22s, we think, we could try and get a very aggressive move all the way back down into the 21s. So very interesting chart. Keep an eye, especially in terms of the market, keep an eye on IWM, so Russell, and keep an eye on XLF. Let's see what happens, guys. I hope you enjoyed it. I hope voice is coming out okay. Thank you so much for all the support. Thank you for all the get well wishes. Very much appreciated. Thank you for liking. Thank you for sharing. And again, buckle up. It should be a fairly interesting week. At least that's what we'll hope for, okay? Have an awesome one. Thank you so much. Bye-bye.